Hey, how's it going? I'm gonna give you a review of today's price action. Today we opened with a very small gap down from yesterday's close and the EMA. Yesterday was a Friday, so yesterday close was here. So when we have a very small gap, we should expect the gap to close in first hour. 70 to 75% of the time it will close in first hour. Uh, Today first three bars of the day were dojis, so technically it was a failed breakout low. Yesterday's low. This red line is yesterday's low, and this light blue line is the open of the day. I always put a line on the open of the day. These two orange lines are Globex range, which is this one is Globex low and this is the Globex high. Uh, Friday we had a broad bear channel, so when we have a broad channel, buyers will buy below lows, prior lows, and sellers and bears will sell pull back to middle of last leg. As you can see, every time we went to a new low, buyers bought it, and when we got back to 50% of last leg, they sold it. Both bulls and bears sold it, and here we got to a new low and bulls bought it again. So when today opened below yesterday's low here, so we should expect that this gap will close, as you can see, especially when we have a small gap and we have trading range price action. So we should expect the gaps, this gap and to close, and we should expect a pullback to the moving average at least. So we had three dojis and four, five, 6 bars, which were very small with big tails and not strong. And in seventh bar, we had a wedge rally. First push, second push, and third push. But because we had 7 bar bull micro channel, we should expect the first breakout to fail. So we shouldn't sell the first breakout, especially when we have an open gap with yesterday's low, which I told you that this is going to close when we have a broad bear channel. Also, it's not touching the moving average. We have a rally with 4 consecutive bull bars. So you should wait at least for a second entry. But when the bear bar closed, a lot of bulls bought it because it was the first break of the micro trend line. So it was a very good scalp for test of the moving average, and bulls bought it, tested the moving average, closed these gaps, and as I told you, uh, uh, we have a bear channel. When we have a breakout below a bear channel, 75% of the times it will fail within 5 bars and it will test the opposite side of the channel. This is the opposite side, which is a trend line, so it got tested. No matter how we draw it, it got tested. So if we try like draw it this way, it got tested. We had a weak rally, so it wasn't all that strong, and we had a breakout. So this is a wedge and a breakout above a wedge. When we have a breakout above a wedge top, 50% of the time we get a failed breakout, and then it becomes a second entry, as, as we expect, especially when we have a micro channel. 50% of the time it will be a successful breakout with 2 legs up and measure move. We got 2 legs up, but we didn't get a measure move, especially this measure move, which was correct but didn't got there. So it was a failed breakout. And then we had this strong breakout, which it closed below all the 8 bars, all 8 bars of the day, and it broke above moving average. It had a fairly small tail, and follow through was good, which confirmed the breakout. So you could buy the close this one, but because it was below the this high, which is last lower high or prior high, we should be suspicious that this breakout could fail and this turn to second leg trap. So basically first leg, second leg, but because this is very strong, it could uh, get another leg and then fail. So we have this breakout, 60% of small second leg up, which we got, and then it failed. As you can see, uh, uh, all of the bars had big tails on top. It showed that there were a lot of sellers and not enough buyers to lift the market to Globex high, because Globex high is 90% certain that gets tested every day, at least one of them. So other thing that you can see is that every time that the rally started, bull bars were going above bad buy signal bars, above bad bars, above dojis. This bar went above dojis. This bar went above bad buy signal bar. This bar, which is bar 13, went above bad buy signal bars, and it had big tail. So uh, it it showed trading range price action, and we had this bar 16. This is 18, this is 16, and it was the fourth time that this happened. So this was a very good scalp, at least, to sell this high, and it worked very good. And this was a give up bar. A lot of bulls who bought anywhere in here uh, gave up because it wasn't all that strong, and this was a surprise bar. Bulls tried to reverse the market and resume the bull trend, but they failed with this doji on 19 bar. It was a doji which technically confirmed this breakout. It wasn't a bull bar to fail this breakout. So it confirmed, it tested to yesterday low, and yesterday low was this bear bar low. So anyone who sold below 7 as a wedge got trapped with this bull bar. As you can see, they had a normal or weak entry bar, but they couldn't uh, get out break even after this bull bar. This bull bar trapped them, so they used this bar to get out. As you can see, this big tail on the bottom is bulls who bears who took got out break even. And then we had this bar which confirmed the breakout. At this point, the bars were below the moving average, so technically, from the EMA perspective, it is a bear trend. And especially this bar confirmed the breakout. Now we had four consecutive bars without a bull body, and these two were big, closing near their lows. So technically, it's sell the close bear trend at this point. So you could sell this and you could sell this, but this selling this one is very strong and very uh, high risk. You should put the stop here, here, or here, which will very uh, high risk and big stops needed. Also, because we had a very strong breakout, 60 to 70% chance of second leg down. But the price stalled here because a lot of bulls who bought this low were scaling in to get back to this point. I will draw a line here so we can see. This is the 60-minute EMA. So a lot of bulls were trying to buy these lows to get back to here, but they couldn't, even though they tried many times, and this was a wedge. But because this breakout was very strong, they couldn't lift the market. Also, we had a Globex low, which is a magnet, and we had a measure move target, which is based on opening range. So we should expect to test this target, then start the pullback reversal or TBTL. This was a low two, but the low two was very far from the moving average. It was late in its sell climax. This was a sell climax. When the bars are very, very big and like they are like falling very strongly, like sharply, they they show exhaustion very soon. So when you see a lot of overlap bars with a lot of tails below, you should expect trading range soon. Also, you could exit here about this bull bar because this was a wedge and you could start the reversal. But the good thing for the bears was that this was the first pullback after 14 bars. This bar was the start of the micro channel. It started here, sold off without any pullback, and this was the first pullback. And 14 bars, a lot of selling pressure, so that's why a lot of bears sold this pullback. Also, when you have surprise bars, this was a surprise. When you have a surprise, uh, bulls and bears wait for the first pullback to sell it. Bulls want to sell out of their long to get out, and bears who didn't sell wait for the first pullback to sell. So they couldn't technically sell all the way down here. This was their first time, first chance to sell it, so they sold it immediately, and it got the second leg down after this, and it reached the measure move target. So also, we had two or three consecutive cell climaxes. So when you have a consecutive cell climaxes, after that you get two legs, 10 bars sideways to up, which we got here. The special thing about this bar is very very big tails, and it's a low one technically after this breakout. Low one after a sell climax, very late, very far from the moving average, gets a lot of buyers. So a lot of buyers bought this low, and it got very strong reversal. And this was a breakout, and this was a follow through. So technically, it broke about this bear trend line, something like this. So after this, you should expect a second leg and a higher low major trend reversal, but not a trend reversal because it's not enough bars, only 2 to 3 bars. So technically, a leg in a trading range. And this sell off tested this buy signal bar, and it was a wedge. As you can see, bear bar, dojis, and this tail, and this tail is another push. So you could buy about this ball bar for second leg up, and these two bars represented breakout follow through, so you could buy this close or above it for second leg, or at least one times your risk. And this broke the moving average, but at this point it's not a buy the close, because we are in a very strong bull trend, and this is a resistance in the 60-minute moving average. Also, if you can see the as we were going about buy signal bars here. Here also we started going above bad buy signal bars. Here bad buy signal bars. Here, if you can see, it is going about bad buy signal bars. So this is a magnet that the market will get back to it again. So we had the second leg up after consecutive cell climaxes, and this was a double top. If you can see here, it's a double top with this high. Technically, it's a high on lower time frame. But because we had like 5 to 6 bars without a bare body, and this was a very tight channel, you can't sell the first result. Even though this was a micro double top, so We went down, up, down, up, like this. Even micro triple top. So if you go to a small time frame, it could be a micro triple top, not even. You see, there are three tops. One, up, two, up, three. So it's a micro triple top. So, but because this was a very strong and we had a lot of gap with this breakout point, we should wait for secondary. And this because it was a first breakout below micro trend line, it should get a pullback, either to a lower high or higher high. This was a lower high pullback, but because it was dojis and it was following a few bull bars, so it wasn't strong to sell below this one. And still we had a fairly big gap with this breakout point. So you should wait for a better sell signal bar. Then we had two legs up after this breakout. So it's technically a nested low two. We have this low one, low two, this low one, low two, low one, low two. So in trading ranges, you have a lot of two legs. So you could view this as low one, low two, but because we have a strong breakout, you will reset the count. So it's a low one here, and this is the low two. But the low two also is a wedge. As Al Brooks mentions in the book, two legs are sometimes three legs, but the first leg is one, and the second leg subdivides into two. So one, this is part of two. So yeah, and we have a wedge here, and the signal bar has a tail, so it's not the best signal bar. Either you could sell it, or you can wait for two bear bars and then sell, or three bars. When you take the second bear, you could go for two times your risk. As you can see here, it went to 2 hour. But when you take the third one, then you should go for 1 hour, because it's high probability, and high probability is okay to take 1 hour. So then we had four bear bars here, and after a wedge you should expect two legs, one leg, two legs. And this sell off became a parabolic wedge. You could view it like this, and this was a high too. As I told you, this is trading range has a lot of high low one, low twos, and high one, high twos. So this one is a high one, and this is a high two. But this one had too much overlap with this bar, and it was following three bear bars. We should wait for second entry. Second entry came it here, and it was II. So this bar is inside this bar, and this bar is inside that bar. So you should buy about this bar, and you could get a scalp. And after that, we got all tight trading ranges, which is not good for trading at all. So also, I forgot to mention that after this strong rally or big rally, and then when we get a sell off, the day becomes a trending trading range day. So when you get these sell off, you should expect the test of this low or breakout point. But today, because we had a very strong sell off, it couldn't get there. So it's also open gap, so for another days to fill these gaps. For the best setups, I think, is buying this close, selling these closes for breakout. These are very high risks, and buying this low was very good. Buying this about this bull bar is very good for wedge higher low MTR, but it's not MTR, we know that, but it's okay. And the best one was selling below this bear bar for wedge for 2 hour. And that's it. I hope you enjoyed it, and see you next time.